Hi everyone, and welcome back to my final morning report charts appraisal on Friday the 30th of October with the Move Pro Market Analyst at Handset Markets. Let's look at gold, and gold is the chart, isn't it, that has been absolutely destroyed by the Fed. Fed move, price of the move, we're up at 1180, bang, downside, 1147 currently trading. So at its nadir, you sort of lost around about $36, $37 on that trade. So interesting that we've got these momentum indicators which are now significantly corrective. Stochastics accelerating to the downside, MACD lines having crossed over, and the RSI which has broken this sort of uptrend that it's been in since July. So the momentum indicators are increasingly corrective, and what we're now seeing is sort of a continued, well, not continued because it's sort of $2 up on the day, but certainly potentially a continuation of this correction back towards the key support around 1140. Now that 1140 level is interesting because I think if we sort of dropped below 1136.50, which is that reaction low there, I would say that we're now back into sort of bear control once again. You'd sort of be back below these moving averages. The outlook would be continually corrective. You've got how strong are those two bearish candles there? They're incredibly strong, has completely changed the outlook near term. Sort of look at this intraday chart, you'd say the hourly chart, sorry, the 1151 reaction low has been broken. That was a sort of pivot band or pivot level support. That has been broken to the downside. That now, having, as I said, been tested yesterday early, is on Wednesday, survived that initial test, but yesterday got broken, and now that could become the basis of near-term resistance. Already, it's not really, the gold price has sort of had a bit of a go at it, not really sure what to do yet, but very interesting that we're seeing these sort of increasingly negative outlook. So you've also got the support, or the old support that came in around sort of the 1158 mark. You saw a rally towards 1162.50, which has fallen over. So you've got sort of $4 or $5 worth of resistance there, between 58.80 and 62.50. That is your main line of resistance now. So your initial line of resistance 1151, but the main line of resistance is 1158 towards 1162.50. So we need to really sort of concentrate on these levels, because the outlook is certainly now deteriorating, following on from those two sharp downside candles. Rallies are likely to be seen as a chance to sell. Just looking at these momentum indicators, consistently throughout the last sort of few weeks, you've had the RSI on the hourly chart forming support above 30. Saw a break below 30 now, so the momentum is increasingly negative. The MACD lines were at a new sort of 1 month low. Just now, all it is just unwinding that move. So you'd start to think about your selling opportunities at resistance levels, and with the RSI sort of unwinding towards the sort of 40-50 mark, I'd say you're sort of on the lookout now for your next sell signal as a near-term trade. So very interesting moves. But as I said, if we sort of drop below 1136.50, then I'm going to have to turn once again medium-term negative. So I wish you good luck in your trading on gold today, and I'll speak to you again on a Monday. Thank you.